Now we are.
We have been handling September 2021.
Now we are
One
doing session
management
5
accounting,
for
and in
revision
today's session
financial
I'm introducing
reporting.
you to question.
Yes, welcome again to our series of revision. We are still dwelling on the September 2021 QA paper. We have done questions 1, 2, 3, and now we are moving to question 4.
Hi candidate, welcome to Manifested Online Classes. My name is Joseph Kemani, your lecturer for Advanced Financial Reporting and Analysis. So remember, this is one of the units which a candidate is expected to sit and pass at the advanced level of CPA. And the objective of this unit, or the objective of this paper, number one, is to help the student to account for complex financial transactions. These financial transactions include accounting for things like deferred taxes, accounting for things like financial instruments, and so on. Number two, a candidate should also be in a position to prepare complex or basically advanced financial statements, both for private and also the public sector entities. These include now the entities which are operating within the public sector, like what if as the county government, the national government, what if as the NGOs or the not-for-profit making organizations, and also a student should be in a position to prepare things like the group account and so on. So the other objective of this particular unit here is to help the student understand the current trend in accounting. For example, issues to do with sustainability reporting, issues to do with what we refer as the integrated reporting. So therefore, those are some of the objectives of this particular paper. And once the student sit and pass this particular paper, that particular student, number one, should be in a position to prepare the group accounts in accordance with the various international accounting standards and also in accordance with the various international financial reporting standards. So I mean that once you have done this particular paper, you have passed this paper, you should be in a position to prepare group accounts in compliance with the various accounting standards. Number two, also a student must be in a position to prepare financial statements of various entities, including entities which are operating in private sector and also operating in public sector. Number three, a student should be in a position to analyze financial statements using various techniques, such as computing things like earnings per share, preparation of something called the segment report, both for private sector entities and also the public sector entities. And also a student must be in a position to account for complex financial transactions. I've mentioned some of them, including accounting for deferred taxes, even at the group level, accounting for things like leases, accounting for things like financial asset and financial liability. So therefore, those are the running outcomes. So once you have done this particular paper, and by the end of the day you have passed advanced financial reporting, then those are some of things you should be in a position to do. So in course of covering this particular syllabus, I will be providing summarized notes for each and every subtopic. And this particular unit here do have a total of 7 or a total of 6 topics. And each topic do have a number of subtopics. So what I'll be doing, I'll be providing a summarized note on the same. And also I expect that in course of covering a certain subtopic, you should also be in a position to take your own notes. And once we are through with a certain subtopic, then we will be doing some illustration questions. Usually, these particular illustration questions which we will be doing as far as this particular subtopic are concerned come from the Kasneb past papers, and actually the most recent Kasneb past papers. And also, other than doing a question or doing illustration question for each and every subtopic, I'll also be giving some assignment equally from the Kasneb past papers, which I expect you to attempt so that you can be able to have a detailed understanding of those particular sub topic. And in case you have any challenge in terms of tackling those particular illustration questions, or basically those particular assignment which I'll be giving in class, I usually encourage my student to procure our revision partner. We have a revision partner which is actually updated to the most recent sitting. So I usually encourage my student to procure this. It's basically available at a very affordable rate. Get a copy of this, and you'll be able to get all the solutions for all the assignment which I'll be giving in a class. So therefore, I welcome you in this class of advanced financial reporting. Again, I will be your lecturer for advanced financial reporting and analysis.
Hello learner, welcome to Manifested e-learning platform. My name is FAM Lengwiri and I practice within the financial services industry in Kenya. Today we are discussing on the financial modeling and data analytics paper. The focus is on the December 2023 sitting. We are going to discuss on question 21. The question reads as follows. Eugene Shahira has been provided with a set of historical data by one of his clients, which include a set of assumptions, statement of comprehensive income, statement of financial position, statement of cash flows, and supporting schedules as presented below. And so you can see down here the assumptions. These are the assumptions that have been given to us here, and you can see they're presented in blue for the forecast period, and this is the historical results. We have the income statement, the balance sheet given to us down here, and the cash flow statement just under it. Finally, we have what is called the supporting schedules. We are required using the assumptions presented in the assumptions table, assist Eugene to complete the following statements of forecast period for the forecast period. A, the statement of comprehensive income, the statement of financial position, the statement of cash flows, and the supporting schedules. All of these total to 30 marks. So we go back up and start filling out the income statement based on this forecast period right over here. So the forecast period is from 2017. And we are going to start with the income statement. So the revenue, to model revenue, we have been given the revenue growth rate over here. And so we are saying that we are going to assume that the revenue is going to grow at 5% initially, 4.5%, 4%, 3.5%, and 3% in 2021. So we will increase this 150,772 by a factor initially of 5%, 4.5%, and so on and so forth like that. So let's do that together. So the first thing is to link it with that, and then we multiply by that factor 1 plus now this growth rate right over here, and we close the bracket so that now the model can be complete, or the formula can be complete. You can see in 2017 we expect it to be like that. So we drag it, Control R, and it picks the formula like that. Else we can do the following. If we don't prefer to do it like that, we just focus it like that, and we wait for that plus sign over here like so, and then we drag it like that. So we drag the formulas, and you'll still see the answers are the same. How do we model cost of goods sold? Now we are told that the cost of goods sold is provided as a percentage of revenue. Meaning what? We get the cost of goods sold over revenue gives us 37.5%. I can do it right above, right beside it here. So you can say COGS over revenue will give us the COGS percent, which is this one right here. But how then can we use the COGS percent to be able to model the cost of goods sold? We just get the revenue and multiply it with the cost of goods sold percent, so that now we can be able to model the cost of goods sold, because that is what we're going to remain with over here. Because cost of goods sold over revenue is cost of goods sold percent. So we cross multiply the revenue multiplied by the cost of goods sold percent, then we should be able to have the COGS. And that's what exactly we're supposed to do. We take that and we multiply, or the revenue, we multiply that with what is called the cost of goods sold percent as a percentage of revenue. Enter there. And like the same way we've done before, we just drag it, Control R. The gross profit, because it's a formula, we just drag it, Control R. Now we move on to the expenses down here. So the salaries and benefits, what are we told as far as the assumptions are concerned? We are told that the salaries and benefits are given to us in terms of shillings, 25,000 all through like that. And here we're saying it's going to remain as 10,000 in terms of the depreciation component. So because they're following each other like that, and these are considered to be fixed costs, we just pick them from above. There, just pick it up from there. And also because they're following each other, just drag it like that, put it like that. And then now, we fill it out like that. What I've just done, I've just picked this one from here. And you can see from here, this is I32. Like that. So it's I32, which is this cell over here. But now, where do we pick it from? We pick it from I13. This is I13. I13 is this one here. So we're picking it just from there. And then also this one is going to be I14, which is down there. Now we move ahead and try and model the depreciation and amortization. In real life, trying to model depreciation and amortization will prove to be a bit of a challenge. Determining will be a bit of a challenge because we need to know whether it's going to be reducing balance or whether we're going to use straight line method. For simplicity's sake, the way I've seen it right over here, depreciation as a percentage of PPE, it's just based on straight line method like that, for simplicity's sake. So the depreciation